The following is a presentation of TFNN.
'Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
From TFNN, welcome to the April 14th marvelous Monday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. Hope everybody out there had a fantastic weekend. Great to be back with you. Let's go take a look at one of our tools. This is the tool I call the gift of being present. Many years ago, back in the 80s, I don't know if you ever have caught yourself doing this, but back in the 80s, I used to say to myself, I've got to get my family to the beach, or I've been promising to take them to the beach, and what are they going to say if I don't take them to that beach? And then, when I got them to the beach, guess what I was thinking about? That's right. I was thinking about the office. All the unsolved problems and everything that I had to do. So physically, I'm at the office thinking about the beach, and then when I physically get to the beach, I'm thinking about to the office. How backwards is that? So I don't know if you've ever had that experience, but if you have, then you know it's absolutely insane. Now, this is the lesson. The greatest gift, the absolute greatest gift that you can give to someone, that's including yourself, is the gift of your presence. So I say make a play day a play day, make a work day a work day. If you're taking off at 3 o'clock to go play golf, turn that phone off. And don't start playing golf, though, until 3 o'clock. While you're at work. And when you get to the golf course, turn off work, and especially that cell phone, folks. There's nothing better than the gift of your presence, and thank you for your presence here today. Let's get these markets kicked off. Right now, we've got Dow futures are trading up 65 points, trading out at 16,046. S&P futures up about 10 points, trading at 1822. NASDAQ futures up 22 points, trading out 3466. Russell 2000 up 10. So we got green arrows across the board. Guess what, folks? U.S. dollar, King dollar is up 35, 352 ticks, up 35 pennies, trading out at 79.87. That means the Queen here pulling back a bit. We'll take a look at the currency market, hard currency market out here. You got the Goldilocks is up $6 right now, traded at $13.25. Silver up 3 pennies. That's a laggard out there, trading out at $19.98. Light sweet crude is flat. It's down 18 pennies right now, traded at 103.56. Quick peek across the globe out here. Let's see what we have going on over in Europe this morning. Flat markets out there. They're waiting for the U.S. to either pull things up higher, or maybe the Bears, took some time to rest this weekend, and they're just getting ready to charge up. So we can't get any clues out here. Well, I might be able to find some clues, but right now, flat markets. The FTSE is up 87 cents. The DAX is up 16 pennies. Over in Asia last night, relatively flat market as well. The Nikkei down 49 points, 0.3%. Hang Seng up 35 points. That's really flat in the market since its index closed at 23,038, and the Shanghai up $1. So where do we begin our trading session? Hope everybody out there did have a great weekend. Great golf. The Masters tournament, what a great tournament out there. What a test of courage out there. What a test of golf. Anyways, let's begin the day. Let's go take a look at the daily charts out here. Let's do that. And let's take a look at the daily futures. Let's go see what we've got going on out here. And so here we go. Just got to find the right tab for it. Let's start off by taking a look at the NASDAQ futures out here. Let's go see what we have done. That's the NQ on a daily basis. NASDAQ futures here, they've made two A to B equals CDs to the downside. The most recent one was a 1 to 1.272. That was Friday's session. That would have taken us to 34.42 was the projection. Actually closed at 34.42, really right on the dot. Interest session, we saw a low of 34.31 out there. Now we're getting a bit of a bounce out here on the daily chart. If you were to see a close today above Friday's open, which was 34.85, that would be your signal. That would be the markets telling us the story that the bulls are in town. Not the Chicago bulls, the kind of bulls where you've got buyers out there. That would give you a bullish engulfing candle. Now, what the NASDAQ also did, as it was making its most recent A to B equals CD to the downside, also trading into support. You got support of this nice little set of this little Morningstar candle configuration out here. It took 4 trading sessions. It's often referred to as a three candle formation, but you need to be able to visually see these things over longer time periods out here. So you've got a bullish bottom, a bullish support area. That's at the price level of February 5th. That's at 34.12. Another little bull sash candle out here. Yankee Day. That was December the 18th. That says that low of 34.15 is going to be a hard one for the bears to chisel through. Not that they can't, because they were out in droves last week. Out in droves big time out here. So we'll see whether this is one of these sell the rally moves this morning. And you'll know by the end of the day whether it's more than just sell the rally, and this is just and now we've got a little bit of a relief rally out here inside of the markets. Again, the key number here to be watching on the NASDAQ futures is going to be a close today. This is bullish or bearish. You just need to be able to take a look at both sides of the trade here. What you need to be looking for is a close above 34.85. Will be another bullish signal, a third bullish signal down at the bottoms out here. That'll tell us that is a strong area of support. So that's what's going on the daily chart there. Let's go take a look at the daily chart for the S&P 500. Let's go see what that futures contract is looking like. What we've seen down here, let's take a look at retracements. Let's come off of our consolidation box low. It's a big consolidation out there, no question about it. At this stage, the longer-term consolidation looks like we'll see the ES-mini S&P futures trade down to the bottom of it. If we go from the low, February 3rd's low was 1732. We go all the way up to the high that was put in out here not that long ago. It was not last Friday, but the Friday before. Boy, a lot of change in the marketplace in 1 week's time, wasn't it? We take a look at that high on April 14th, 1855.75. You'll see that price did not make it down yet to the 0.618 retracement level. That number, 1793.50. What we have seen here overnight, the futures opened up lower, gapped down just a bit, traded lower during the first hour of trading out here, got down in the case of the S&P futures, got down to 1803.25. Well, today, because of gapping down, because if you take a look at this candle here, the open of this candle, I want to go ahead and blow this up on my chart here. Probably should have pointed it out on the to see if we had the same thing on the NASDAQ. I would assume that we did. But first, what I want to point out to you, if you take a look at Friday's intra-session low, which was 1807.25, the open last night was at 1806. So it gaps down below even the low. The body of a candle is truly the essence of price. That's why we really focus on the bodies out there. The stems, the wicks, the shadows are nothing more than the extreme emotion during that trading session. In this case here, we're taking a look at a daily chart out. So it took a lot of energy. It goes ahead, it gaps down below the low of Friday's session. Now today, if the bulls are able to mount a charge, and they'll really be able to mount a charge if you were to see it close above Friday's open, in this case here, 1829.50, then that's going to confirm us that, okay, we'd have some synergy. I would assume that the NASDAQ would also be giving you that bullish engulfing out there. And since that's the weakest area, it's the one for us to really be paying attention to. So the question would become, hey, where is it that the ES Mini could go ahead and trade up to it? I have to say, these moving averages, the top of the box out here, the 1846, 1839, 1840 area, that's what I would be targeting as to where the bounce. We'll have to see what kind of volume might come in if, in fact, bounces up there, which I suspect that it's going to, folks. So, if you haven't gotten that signal from my communication, then, okay. But that's what I suspect we are going to see out here is a move in the ES Mini up to about 1839, 1840, somewhere right around there. You're at 1821 right now, so that's a still pretty healthy move out there inside of the markets. And I expect we'll find some resistance. I expect the bears will just simply reload at that time and decide to try to pummel the bulls. But we'll see. We've got to take things one day at a time, one moment at a time. If we take a look at the Dow futures out here, now the Dow futures, all that they've done is they came down to the last support level That was a big old bullish engulfing candle. And it's really about the market is always telling us stories. That's the beauty of Japanese candlestick charting. That's the beauty of A to B equals CD patterns. It's the beauty of so many of the different tools that are offered here at TFNN. Well, one of those tools being this nice big old bullish engulfing key reversal session that took place in the Dow being strong like bull out here. And today, you'll get another strong like bull move, potential strong like bull move, if in fact you see a close above the trading session, the open of Friday, which, by the way, that is at 16,129. You're at 16,040. That's another 80-point move to the north out here, so that would be a large day inside of the market. So your question would be, where is it that the Dow could take us up to? Well, you still have that high volume high, which was tested. That was the high volume high. That was from not last Friday, but the Friday before. That was the April 4th Jobs Friday session out here. I'd have to say the bottom of that becomes the target line, 16,312. Of course, we take a look at just normal retracements out here. That means going from the high of that Friday. That was out at 16,574, down to the low that we saw here last night. Your dead cat bounce gets you to 16,146. Well, it's 16,146, and it closed there. That gives us another bullish engulfing candle. That tells us that these lows out here are very important inside of the Dow, and those lows being the 15,911 inside the futures contract that we're looking at. And that says the normal bounce, the normal area, normal retracement. You would, if you were into Fibonacci numbers, and you ought to be into Fibonacci numbers, that would say 16,309 would be the number. Now, at 16,309, what does it do? Well, guess what? It tests that April 4th high volume, high candle out there, and that will be the thing to watch. It'll be what is the volume coming in to that retracement level, into that swing point, into 16,312 out there. Inside the futures market, you were looking at about 116 plus thousand contracts out there. And that's what we'll be looking at. If we go take a look at the Russell 2000, remember I have about a 10-minute delay inside here. Of course, Russell 2000, if we take a look at a monthly chart out here, what's interesting about the monthly chart, and this will take us back from the July 2007 highs out here, okay? Inside the Russell 2000, it made its high in July versus October, like the rest of the market. So the Russell 2000 had really led things to the upside here. They, of course, led things to the upside in the markets that we are trading right now. Of course, showing some weakness, and with the markets, the reason why there could really be a change in trend taking place here, both from the NASDAQ and the Russell 2000. If the markets are going to motor higher, it is going to be these two indexes that are going to lead the way. And if they're leading the way on the way down, folks, it's sending a huge message. However, let's take a look at what's going on here right now on the, we'll go switch over to the daily chart. On the monthly chart, though, no reversal signal yet, because the month is not over. It's only April 14th. Stick around, though. We'll find out what the daily charts are communicating to us. Right now, we've got the Dow futures. They're trading up 68, S&P up about 10. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts.
In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire, so now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go finish out. We were taking a look at the daily charts here for the index futures. So let's finish this off by taking a look at the Russell 2000. Now, the Russell 2000 on Friday formed a beautiful 0.786 Gartley buy pattern. Now, we don't have confirmation of this Gartley buy pattern. That's, again, on a daily chart. That's what we're going to be focusing on today. Now, if you take a look at this pattern here, and I'm going to try not to sneeze in your ears here, so I'm doing the best I can to hold off, but if not, you might hear a pause. If we take a look at it, I shouldn't have talked about it, right, because that just encourages it more. Now, if we take a look at this, beautiful retracement levels from the, if you take a look at coming from the February 5th low, that low inside the Russell 1078, all the way up to the high that was put in here on March the 7th, that was out at 1212. If you go from the low to the high, you'll see the 0.786 retracement level right around the 1110-ish area. Now, if you take a look at the B to C swing point, so all Gartley patterns have an A to B equals CD. If you take a look at the B to C swing point, that B to C swing point would be your March 27th low, 1141. Your C out here, that formed the C of the A to B equals CD to the downside. That would be the high on April 3rd. That was at 1191. If you take that difference in price, you multiply that times 1.618, and you subtract it from the C point. That's what will take you down to the 1110 area. So you got beautiful Fibonacci numbers coming together in the same general area right around 1110. Now look, price actually did get down to 1102 on Friday, and of course last night at the open, we too saw a gap down, not like we saw inside of the ES Mini as we were taking a look at. That's why paying attention to the signals that the markets are always communicating to us, reading the message, the story that the markets are telling to us, really important to take a look at. And the ES Mini and the NASDAQ, I think, right now today, very important for us to be watching. Well, in the Russell 2000, not that that's unimportant. In fact, if you were to see it close today above or equal to 1123.70, and again, I'm on a little bit of a delay here. We're at 11:18.10. You'd have a confirmation of a bullish buy pattern, a bullish Gartley buy pattern with beautiful Fibonacci numbers. What does that say? Well, when you take a look at these patterns, remember every Gartley has 5 potential outcomes. Outcome number 1 is, of course, that dead cat bounce. Your dead cat bounce inside this takes you to 1143. Outcome number 2, the 0.618 retracement. That'll take you up to the 1170 area. Of course, we'll take things one step at a time out there. Outcome number 3, that would be 1188. What's the first likely outcome? You've got to say 1143. Just simply, even though it's not totally oversold, it's down towards the oversold level. The same area that price was at, or from a relative strength reading, the same area where price was at right in that February 5th time frame. We also had very close to a move of a move, 100% move of a move by price getting down and almost testing the February 5th high out there. So at this stage of the game, we've got a reversal underway. We know exactly now the daily charts, right? Daily charts going to be more important than the 120-minute charts, than the 30-minute chart out here. So we've got our daily routine already figured out. Let's go see what the 120-minute chart time frames are telling us. Let's pull up the Rhodes momentum indicator charts out here. Where do we have it? Looks like I've got the Russell. Here's the Russell 2000. It now really confirming, right, we'll see what happens here at the open, but at this stage here, giving us our first confirmation of a real bounce. We were looking at this on Friday's session. Well, Friday's session, we had some price relative strength divergent patterns that were showing up. And on the 30-minute charts, I believe we were looking at the 30-minute charts. Let's go over and take a look at that. It was on the 120-minute time frame here. Yeah, here's our 30-minute charts. Now, remember, the reason I was looking at the 30-minute charts were because when the highs came in on Thursday morning, I believe it was Thursday morning out there, I was focused on the 120-minute time frames. It wasn't until after the radio show, it was a little bit after that, when I noticed that there was synergy at the highs inside each of the 30-minute charts. These are right up here. These coming in. Let me get my crosshair out here. Maybe you didn't join us on Friday. All of that occurring right at about, in the case of the Russell 2000, about 4 o'clock in the morning on April the 10th out there. In any event, we were looking at this pattern. We were looking at these lows on Friday. It gave us a potential indication right around, well, when is this here? This is 8 o'clock in the 8 o'clock in the evening. When? That's last night? No, couldn't have. Well, wait a minute here. Yeah, I'm on a 30-minute chart, most certainly. So we got a first indication here inside the Russell 2000 at 8 o'clock last evening that it wanted to bounce. And now we're really getting on the 30-minute chart. We're getting that little confirmed follow-through. I would say, look, the 30-minute charts are giving us indication, of course, with futures being up like this, that each of these price relative strength divergent patterns are certainly in place. Now, on a 30-minute time frame, because the relative strength index right around the 79 area, maybe what we see here is we see the bears rush in the early stages, try and push price back a little bit to work off some of that condition before we see whether or not the next move is higher on this counter trend rally bounce. Right now, Dow futures up 77, S&P up 11.5. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 87 points, trading out of 16,113. S&P up 13, trading at 1829. Composite up 37 points, trading at 4,036. Leading the charge, the upside is the Russell 2000 up 11 points, trading out at 1123. Apple's up $1. Microsoft up 13 cents. Google up $6. Leading the charge, the upside, Edwards Life Sciences up 13% this morning. EW is its ticker symbol. It's trading out at 8213. WebMD, WBMD is up 19% here this morning. It's trading out at 45.17. We've got Aspen Insurance, AHL, up 17% this morning. Amazon up $4.78. Netflix up $4. Hunt, JB Hunt Transportation, JBHD, up 4% this morning. Goodrich Petroleum, GDP, is the ticker symbol. It's up 21% here. Tesla's up 2. Baidu is up a couple of points out here. To the downside, Antero Resources, AR is its ticker symbol, off 6.5% right now, down $4 and change. Medtronic, MDT, is the ticker symbol, off 4%, down $2.50. Asmil Holdings, ASML, off 83 cents, not a big deal. So nothing really large here to the downside, largest dollar-wise, Antero Resources. Let's take a look. Let me go back here. Let's go back. Let's take a look at the Nasdaq again, the NQ. Let's take a look at the 120-minute time frame chart. Let's go check out the 120-minute time frames, and let's see what our task signal box looks like out here. So it shows resistance right now. You're trading out at 34.65. Shows its first area of resistance at 34.8690 out there. So that's a number to be paying attention to. Are the bears camping out right there? If in fact the bulls are able to take over that price, 34.86. What you can expect is a move up to about the 35.31 area. That is where the largest number of transactions, the largest area of congestion is at. Again, you're trading at 34.66 right now. Let's go take a look at some of these stocks here. Well, I'll tell you what we'll do. Let's go look at the currency market. Then we'll come back. We'll take a look at some individual stocks, see what they are trading at. Let's switch over here, switch over to this tool system. Let's go check out the euro first. Euro, U.S. dollar. We were taking a look at the weekly chart last week. Well, that's a 30-minute chart. I don't want to look at a 30-minute chart here. Let's come back and take a look at the weekly chart. Why the weekly chart out here? Because, the euro is truly trying to break through long-term descending price channel out here, both the trend line and the channel line. The trend line is the black diagonal line that you're looking at on our screen. The red line is the downtrend channel. The euro has broken through this level. It has come back and it's tested it several times. It continues to reject lower price. It also has this little rising price channel. I know there's a number of lines out here on my screen. It's got the primary trading range boundary lines. I hope all you folks took advantage of Bud's workshop on Saturday morning out here. This, in essence, is his work. I've automated that tool on this charting application here so it can automatically go in there and draw those primary trading range boundary lines out here. In any event, if we take a look at the rising price channel, those are the blue diagonal lines on my screen. You can see how this area has acted as good support. Right now, the euro on a weekly chart, on a daily chart, obviously first day of trading since Friday, we can see that the level of old resistance, perhaps now new support, that's right around the price level, about 138.16 out here. Yeah, 1.3816. You're trading at 1.3820 right now. Now, that's the weekly chart. Last week was a confirmed breakout and holding the rising price channel. What the euro needs to do to really break out is get above the swing point for March 14th out there. That's really not that further. Does not have that much further to go. 139.65 would be the number. Let's go take a look at the daily chart, see what the message is on the day. Now, I'll tell you what, let's look at the monthly chart, then we'll go take a look at the daily. So the weekly here showing a breakout. The monthly says, hey, not so fast, not just yet. Now, of course, the weekly chart's going to have different channel lines to take a look at. If we take a look at the trend line here on the monthly chart, again, it shows that high back in July of 2008. And look, right now, price, we've got two small-bodied candles out here. These are what are referred to as spinning tops out there. And the question is going to be, when we take a look at this month here, if you can get above, really right about where it's at right now. So close anywhere above 1.3819 out there. And I don't mean like by a tick or two. I mean with some conviction out here. Then what that ought to do is that ought to send the euro up into the 1.44 2-ish range out there to complete an A to B equals CD to the upside out there, and that is what's going on inside of the euro. Again, now let's go back and take a look at the daily chart out here and see what its message is. And I thought it was important to take a look at the monthly chart. I know it's important to take a look at the monthly chart. So we saw the euro here open up last night, traded lower. You can see that old resistance line. We'll see if that continues to act as a support out here, but a bunch of support, whether it's trend line support on a pullback, whether it's channel line support, and the euro at this stage here is proving that there is not a false break to the upside, not just yet. That's what's going on in that currency pair. Let's go take a look at the see what pops up on our screen here next. Let's take a look at the U.S. dollar Japanese yen. Of course, I know everybody out there says, hey, Steve-O, let's go take a look at that euro Japanese yen, because that is the one that paints the direction for our markets. Right now, the U.S. dollar Japanese yen trading out towards the most recent swing point lows out here back from March of 2014, March 3rd, to be specific. That level is held as support, which, by the way, is a price point of 101.19 out here. Not a whole lot of bullish action direction other than the fact that its support line is being held. It still has in place here an active Gartley sell pattern. That was a 0.618 Gartley sell pattern. That area was tested way back in the early part of this month, April 3rd, but that gave us a nice big old bearish engulfing candle and said it wanted to go all the way back down to what? To the consolidation pattern that it is in out here. So one thing we know about the U.S. dollar, Japanese yen, if we go ahead, we take a look at that consolidation pattern, whichever way it breaks, it should have a measured move equal to or greater than that. In the case of the move to the downside, what that really sets up is if we go from the swing point from October 25th, that low out there at 96.93, all the way up to the swing point high from January 2nd, you'll see that the 0.786 retracement level, $98.75. If the U.S. dollar, Japanese yen breaks the consolidation low that it's in, it'll go ahead and should at least fulfill that price objective. That's what's going on inside the U.S. dollar, Japanese yen. Let's take a look at the euro, U.S. dollar. I'm sorry, we already took a look at the euro. Let's take a look at the euro, Japanese yen. Let's go see what we've got out here. Of course, this is the weekly chart. We'll flip back to a daily chart out here. Weekly chart shows what? Shows that the price is well above an old resistance level. And this is a resistance level going all the way back into 2009. And so actually from a long-term perspective at this stage, so long as that correlation continues to be active out here, and it still is active, this says that the euro, Japanese yen wants higher price. All that it really did was it ran into the top of its primary trade, which is 144.33, got up there, it's pulled back to where? It's pulled back to an old area of resistance. It still is acting as an area of support. In order for this ring to really be a false breakout, it's going to have to get down below that area. Of course, you're saying, what is that area? I would say that it's right now, it's a guideline. Remember, this is a guideline. You don't go exact to the tick, but right around the 183.34-ish range. You're trading at 140.72 right now. If it gets back below that, then we start to see it pull back to the 134.12 level. That's what's going on the weekly chart. If we go take a look at the daily chart, let me just switch tabs out here, be a little bit easier, and I don't want to lose all that weekly data out here. If we take a look at what's going on inside of the daily chart, we'll see really looks a lot like the U.S. dollar, Japanese yen does at the moment. We can see that really significant support level. And that was that breakout session from March the 6th out at 140.38. So while our markets here broke down last week, the euro, Japanese yen did not break whatsoever. And that is one of the reasons why I believe we're at least seeing some type of counter-trend rally in the markets. We know what we're looking for on a daily chart out here on a daily basis with regard to those candle signals. If you don't get those candle signals out there, because it's an opportunity for the bulls to try to take control, to get a little bit of relief out here, that too will be sending us an important message. If we check in on the VIX index here, let's go see what it's trading at right now, and then we'll take a look at some stocks here, popping and dropping. The VIX index is above the 50-day exponential moving average. What does that mean? That means that that is where the bears truly have control, because it's a liquidity gauge, or that's how Steve O'Son likes to use it, a liquidity gauge. When price is above the 50-day exponential moving average, says there is a lack or less liquidity inside of the market out here, and that's where damage is done or can be done inside of the S&P 500, inside all of the indexes. What's the key number to be watching for inside of the VIX index? That price point is 1482. You're trading right now at 1661. 1482 is the 50-day exponential moving average. Let's go check out some of these stocks here, trading to the upside and to the downside. Let's take a look at WebMD. Let's go see what that is doing. I don't recall if that is out. It was at one point in time inside the IBD 50. In fact, we need to take a look at the IBD 50 stocks. We'll do that tomorrow, because I don't have that yet punched into my system here. In any event, let's take a look at WebMD. Trading up a nice, healthy 18% plus this morning, up $7 and change. Let's go see what kind of volume is behind this move out here. So gapping up nicely now. This is running into a high-volume candle, two really high-volume candles out here. So there's a bit of a supply line that it's dealing with, and that is from the trading session of February 11th. Now, that was pushing lower. That was pushing into a swing point, this little hammerish doji-style candle from February 5th out there that only had 727,000 shares. It pushed lower and rejected that price point on February 11th with 4.5 million shares. So trading up in that, it's got good volume this morning. This has already done 724,000 shares. shares in only 15 minutes of trading. So WebMD, what is it likely to do? Let's put this on a longer-term chart out here. Let me see if there's some other areas of support resistance here. So let's take a look at a weekly chart, because currently it looks pretty darn good. Now, yeah, it's closed its gap out here. That's no longer an area of resistance, really. We take a look at a little trend line out here. Let's take a look at the, let's try to identify this. Let's see if we can find an area here of potential support. Yeah, I'd have to say that would be the channel line. So it's above the channel line. Let me go ahead and draw this back. We can go ahead and draw this in completely in on the screen out here. At least this is how I like to do it. Makes it a little bit easier for me. So as we take a look at that, here is our rising price channel. So broke right through that. Give me a moment. And there is probably right around here is the top of that area. It gets to... yeah, I'd have to say there is your price channel inside of WebMD. Looks like it's going to go ahead and make a run for the top of that. Ought to take it up to a price level right around the fifth. Well, ought to take it back all the way to this most recent swing point high. 5.7 million shares. That is February 21st. It's a weekly session that we're looking at. Looks like WebMD wants to try to make a run for the 51.41 level. Let's take a look at its retracement off of that weekly high to last week's low out here. You can see in one trading session it's moved up to the 0.618 retracement level. A very wide-ranging bar. Remember, go ahead and fill in the gap out there. Oh, let's go to Janice in Bucks County, Pennsylvania. Janice, thanks for calling. Thanks for holding. How are you this morning?
Good, Steve. How are you this morning?
Excellent. Thanks so much for asking. Did you have a nice weekend?
I did. It was beautiful here. How about you?
Yes, very nice. And, played a little golf, watched a little golf, and it was wonderful. We only have 2 minutes here, so let me get to your stock. I apologize I didn't see you on hold. McDonald's, MCD, tell me what you're doing, how I can help you.
Actually, I was looking at McDonald's for a long position.
Okay. And at this stage here, McDonald's right now, what it's doing is today it is trying to take on a resistance level from a gap down from July 22nd. So what you want to see it at least do today is prove itself to you, which is close above 99.53. It's traded 99.70. We've seen two tests of this area on lighter volume here, Janice. And if we take a look at that, downdraft session from July 22nd out here, what you'd really like to see is you'd like to see that area taken on with volume, because that was 13 million shares. That area was tested with 8 million on April the 10th. It was tested with 6 million on Friday. So far today, it's up with 565,000 shares. My mind says that would be about another 6 million share day out here versus that downdraft of 13 million. So you're looking for a long-term entry into this. Did I hear you say that?
That's correct.
Okay, so from a long-term entry, let's see what this does here at this resistance level. And what I would say is, let's see, what do we have here? You would want to take a look at, this had some nice volume to the upside. So if this pulls back one more time into about the 95.71-ish level, that would be the place where you would first start going ahead and trying to take a long position. That's where I would first start looking at it. You would want to see price pulling back with less than 16 million shares into that area. All righty?
All right, thank you very much.
Okay, I'll go ahead and I'll cover this in further. I'll take a look at it with when I've got more time during the opening, during the first segment of the first show out there. All righty?
All right, thank you, Steve.
You bet. Have a nice day. That was Janice in Bucks County, Pennsylvania. Right now, Dow is up 70, S&P up 9. Folks have a, I've got another segment here. I didn't need to cut Janice off. Looks like my clock is off. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his Opening Call newsletter. Right now, you can get a 2-week free trial to the Opening Call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's up 62 right now. S&P is up 9. My apology to Janice. Hope she's still listening in. I was poor clock management on my part. Good thing it wasn't a basketball game or something, and a total blunder out there. But I did double dribble that ball. So we're going to go back and take a look at McDonald's for her. We're taking a look at. She's interested in taking a look at McDonald's from a longer term trading standpoint. So it's a weekly chart now that is up on my screen if you're following along here at on us with Tiger TV. And really, as we take a look at a weekly chart out here, you can see the same area of potential resistance. That was this gap down. So that's the gap down that took place the week of July 19th out there. We covered that on the daily basis. Now, the weekly here, as we draw we use a black line across the screen, a little bit darker here. So you can see that McDonald's had gapped down the week of July 26th out here. Did it with some pretty decent volume, 34 million shares. Then the first time that it tries to get up there is the following week, 20 million shares. The week after that, 19 million shares. Remember, the benchmark here is at 34 million shares to the downside. Trades down, looks like it completes an A to B equals CD. Let's take a look at that pattern out here. The A point being the high from April the 12th. The week of April 12th, the B point being the week ended June 7th, that low 95.16. A C point out here, that was on July 12th. That was at 101.81. So we can see the 1-to-1, A to B equals CD. Price projection was 93.26. It took all the way until October the 11th, where it gets down to 93.14. You got to like that. So it makes the 1-to-1 A to B equals CD to the downside. Never since then really been consolidating in a sideways move out here. Now, right now, what it's doing, it's up against that consolidation area. It's up against that resistance line, again, from the weekly chart, from that downdraft below the 99.30 level. Now, it's trading at 99.70. Last week, it had moved up with 30 million shares. So 30 million going against 34 million, really not too shabby out there. And so what I believe what you want to be able to do here, Janice, is wait to see what happens because you're looking at a long-term chart. This may prove to be a really strong resistance area out here. And if McDonald's can't bust it up, what we'll try to do is we'll try to bust it down. And that's where you'd want to then take a look at it from a benchmark standpoint, take a look at this swing point, how price would act in that February 7th area down around the 92.22 level. I think we talked about that on the daily chart. On the weekly chart, you want to see it come back there with less than 30 million shares. But what that really sets up for you is potentially a little consolidation range that it would be moving into. And if it breaks below there, then because of this consolidation, what that would set up, if we take a look at it, we just draw that little consolidation pattern in here right now, then you would get a measured move to the bottom of that level, right around there. And what that would do, Patty, that would take you all the way back into the swing point from November of 2012. So you do not want to see the lows here from February 7, 2014 fail. And the reason is, if we take a look at one of the strong stocks with inside, or the leader inside the S&P 500, that would be Visa. Let me switch over. Where's my core stocks? They should be right in front of me. Where is it? Where is it? Where is it? Earning core. There, it is right there in front of me. And the reason why we want to pay attention to those gaps down, because there's a ton of information. Here's Visa. If we take a look at what happened in Visa, it gapped down here on January 24th. It did it with 4 million shares. Look at how that red horizontal line acted as resistance. Its final day of in the sunshine was March the 21st. It couldn't bust through it, even though it had volume. What did it do? Well, last week on Friday, it made a 1 to 1.618 A to B equals CD down. Well, now, folks, we are done with today's show. Thanks so much for joining me. It's always great to be here with you. Hope you had a great weekend. Hope you're off to a start of a great week out here. I look forward to seeing you bright and early tomorrow morning or during the next show. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.